Welcome in. This is the Thursday deep dive episode on Chit Chat Money. We're here with Ian Gray. As always, Ian, guys, it's Masters Week. I guess we're excited about that. That's kind of what I've been thinking about for the intro. So, Ian, you got any, you rooting for anyone? I know Jordan Spieth is kind of the number one guy, but yeah.
Yeah, I'm kind of interested in seeing if Jordan Spieth can keep it going here. Got that win recently, and I always like him playing. I feel bad for him when he's had such a bad couple of years, but I'd like to see him get back on top. Or if Brooks Koepka came in and had something good too. But I know the one guarantee I will make is I know that by the end of the Masters, I'll be dying to get back on the golf course.
And then we'll all be playing exactly like them. Exactly like them. But we're talking a company today, as always. It is GoPro, a company that people have forgotten about. It's been a terrible IPO, but they're trying to do a bit of a turnaround here. So I'll let Ryan introduce what the company is.
You're missing something.
Sorry?
Sales pitch.
Sales. Oh, right. We got to talk about that first. I think it's your turn, Ryan.
Okay. Well, I don't know we've talked about it here twice now, but the recs are out, and we've looked at a few recent ones.
To what is it?
7 Investing. I guess if you're not familiar, you can use our code CCM. You get $10 off. It's only $7 for the first month. To our recurring listeners, I know you hear us say this every week, but these recent batch of recs have been pretty dang good. And so
wide-ranging,
and a few that we particularly like here. So go ahead and use that code CCM. But without further ado, GoPro. So for anyone that's not familiar, I think most people know what GoPro is, even if you've never had one. It's kind of, at one point, it was like sort of the pioneer in active cameras. Like people were like, oh, how'd you get that vlog? It's like I GoPro'd. It wasn't really a verb, but you could, it was kind of along the lines. So they basically, that's sort of their bread and butter is the active lifestyle cameras. And they have the more traditional sort of wearables. So let's say you're vlogging or you're going on a hike or I don't know, something active, you can use that. That's probably the kind of camera you would use. But then they also have a 360-degree camera, which I guess, and it's waterproof. I'm trying to think of applicable stuff for that. Sometimes it's
diving, like, scuba diving.
Okay. That's one. And then
kayaking. Sorry, I can think of one.
Okay, and then they have subscriptions. They have a mobile app as well. They sell some adjacent products like accessories. So think like camera accessories, like mounts. And you can bundle that with the cameras. And then there's also lifestyle gear. You may have seen someone wear a shirt that says GoPro, that kind of stuff, that sort of apparel. And then the manufacturing is largely outsourced to China. So that's sort of the supply chain part. But here's what the subscription includes. If you're wondering, like, what do you get with the subscription? They said, as a subscriber, if you damage your GoPro, we'll exchange it, no questions asked. As a subscriber, you can automatically upload your footage to the cloud from your camera, available on all cameras, Hero 5 and newer, or through your mobile device or computer for easy access on any device. Access to all of GoPro Quick to edit and share your footage on the go. You'll also get up to 50% off accessories at thegopro.com. So they've sort of bundled a whole bunch of their features there into one, and that's sort of their, they label it as their subscription, but it's really the diehard GoPro fans are probably subscribing to this. And right now it's probably valuable enough and cheap enough for anyone that's buying like a new camera to do it as well. But the company has had a rough go of it, as Brett said, since coming public. They're sort of pivoting now towards this. Instead of going for everyone, focus on the niche and try to monetize that base a little better. They're going a little more DTC now instead of traditional retail distribution places.
And that's GoPro.com.
Yeah, and historically they've had a lot of their sales come through Target, Best Buy, Walmart, that kind of thing. But now a lot of it is starting to come from GoPro.com. And then I don't know why I like to have this here, but they have 758 employees and they're headquartered in San Mateo, California. I feel like sometimes that helps people remember that it's just a business, not a stock.
Yeah, just the size of the company. And then if anyone's interested, the stock peaked, I believe its high in 2014 was $98, and it's almost went below $2 a share. So really
good returns.
Yeah, right out of the gate, it went up like 100%. But after that, that was tough.
Yeah, it's been it's been down for a while. I mean, it got into a pretty crowded market. I'll get into the history though. GoPro was founded by Nick Woodman in 2002 after a surfing trip to Australia where he couldn't capture the moment because it required another photographer. I'm going to be honest.
I'm sure this went exactly like he's saying.
If I were to guess how GoPro started, that's exactly what I would have guessed.
Or the story that they tell. And then people say that all these stories are kind of embellished, right? So.
Probably, but the Woodman and his wife used to sell shell jewelry and belts out of a Volkswagen van in California to save up enough money to build the GoPro.
Nice.
So if you're picturing I bet you can picture exactly what Woodman looks like.
Surfer dude, kind of?
Yes.
Yeah.
But it took him 2 years to develop the first camera, and he showed it off at trade shows and stuff like that. And it was originally designed to attach to a wrist.
Okay.
And they had pretty significant market share by 2012. They kind of pioneered the space of like active cameras, sort of on the go footage, stuff like that. And that's probably why they have still so much brand recognition. I mean, even people that never use it know about them. The company raised $430 million in its 2014 IPO. It's down 60% now from its IPO, but the business, for the last year, the stock
up 400%.
Yeah, the stock's done really well. But that's basically the history of it. Do you want to talk about the industry, competition, stuff like that?
Yeah, and I guess before again, maybe I'll ask a quick question. What are your guys, when you think of GoPro, what do you think? Because my thoughts are, all right, I never used one of these things, but I get that people would use them. I mean, what happened in 2014 where this thing just came out at such a high valuation? I don't know. What was the hype?
Well, it was sort of, I mean, it was like it was cool hardware at the time.
Yeah.
And we've bought GoPro cameras. We used to do a little more complex YouTube stuff. We used to have nicer videos. And it's just sort of the brand, I don't know, like
high
quality, but not too expensive, decent camera. Okay. And that's kind of the one you think of to go to. But it's not like production level. And I think the other part is phone camera quality has gotten good enough now that unless you really, really need a camera, you can use that as a supplement or a substitute.
Yeah. All right, Ian, what about you?
Yeah, I think just to answer your question about why it was so hot coming out in 2014, I think part of it was it does the thing that all the hot brands do, and it says it was a lifestyle brand, right? That everyone just uses GoPros, and I know, like when I was a kid, everybody who had a GoPro, it's like, oh wow, that's so cool, and you're just like making little videos with your friends who have GoPros or something, or skateboarding down the hill or whatever it is, like stupid stuff. But it just was like, it was trendy. Everybody wanted them. It was the thing that was like coming out. And I think, and we'll get into this more later, but I think part of it too was their huge social followings. And look at all these cool videos that people make, and everyone looks at the videos that like GoPro has like the best marketing material, both for investors and for consumers, that's made by its own product. Right. Like Apple, in some ways, I think Apple's kind of stolen it from GoPro about all the shot on iPhone commercials. But like GoPro really kind of, I would think, kind of revolutionized and pioneered that, where look at all these amazing videos that all these people have done doing these amazing things around the world using our camera. And even though they're not like, they're not responsible for those people doing all those amazing things, they've made it possible to see and share those moments, which just kind of creates a lot of viral marketing for them, I think.
It also feels like vlogging, like the YouTube kind of being young at the time was very fun for my age demographic. Everyone wanted one because they all thought they were going to be YouTube stars at the time.
Yeah, I guess that's a part of it too. But now you can just do it. The phones, basically Apple and Samsung, like the camera's just as good. So that was probably the huge one there. But I guess
right. And I would just add one more thing. I think there was a little bit of an assumption that GoPros were going to be used for everything. And I'll dive into this when we get into management, but like the CEO kind of thought, okay, we're going to broaden our market a lot here, and like all the vlogging and all that type of stuff. And then I think it gets into it a little bit, and they realize, oh, everyone's, the phone cameras get better and better, and everyone realizes, oh, we're going to use our phone cameras for most things, but then GoPro still has this kind of niche that they're trying to return to with more of the active camera market.
All right. Well, yeah, I'm sure we'll talk about them in the second half too, but I'll hit industry and landscape quickly. Competitors include, and this is for cameras, would be someone like Nikon, Canon, Sony, Garmin, stuff like that. A lot of competitors there. GoPro's probably the number one in their niche. And a lot of those companies, some of them have other subsidiaries, but that camera division, it's a bit of a commodity nowadays. And the real competitors are Apple, Samsung, Google, LG, whoever the other ones are for smartphones. That was the big downfall over the last 5 years. Worldwide, the action camera market is pretty small at only $7.5 billion estimated globally. I think that was in 2019, 2020 numbers were probably a little lower just because of the pandemic. And then the software market they're going after is kind of hard to quantify. I mean, I don't know, it's something that's not really been built before because, well, there's been obviously video editing tools and stuff like that, but that's a way larger market than GoPro itself is going after, at least currently. Maybe they can evolve to that over time. Either way, I think the market and the addressable market, although we joke about how that really doesn't matter, I think it matters more than usual here, at least with GoPro.
Yeah.
All right, Ian, yeah, management.
Yep. So we've already talked about him, but Nick Woodman is still the CEO. He was the founder. As we've mentioned, just crazy volatility since they've gone public. Up as high as $90 a share, under $3 a share. It's now at about $12 a share. So crazy run. In some ways, it's a little impressive in my mind that he's still the CEO and that he's stuck around and is kind of part of this turnaround effort too. Like oftentimes it seems like something like that happens and then you get in a new CEO who does the turnaround, and whether that's because other investors force the CEO out or it's because the CEO he's made his money and doesn't care anymore and moves on. But I found that to be a little bit interesting that he's still around even despite all that. As far as ownership, he owns about 19% of the shares outstanding, so very substantial, and a big reason probably why he's still around. Vanguard and BlackRock are also major holders. They own 7% and 5% respectively. So some pretty solid institutional ownership there. But overall, there's only about 48% institutional ownership. So if this turnaround were to be successful, I'd expect that number to get up, and they'll probably get some more institutional ownership coming in and driving up the price a little bit. And then there's about 8% short interest. And I think historically, this has been a stock that has had higher short interest than that. But with the run up this year, I assume that the run up this year was partially a bit of a short squeeze as well. But currently, there's not an alarming amount of shorting in this stock.
Yeah, it seems like it could have been like in that GameStop group.
I do think I read something about it getting short squeezed.
Yeah, for sure. I mean, this was a favorite short name for years, and they did quite well. But maybe it wasn't 140%. So. or whatever. All right, I'll get into valuation right now. Market cap's about 1.9 billion. I think as we're recording, it was down today, so it's a little bit less now. Either way, it's a little less than $2 billion. Ticker's GPRO. Enterprise value is similar. They do have some convertibles that I'm sure that Ian will talk about, but price to sales is 2.1, price to gross profit is 6, and then price to operating cash flow and price to free cash flow looked really, really good in 2020. But that was a bit artificial, a huge bump from what was it? They had, all of the working capital numbers worked in their favor for operating cash flow. Accounts receivable went down, inventory went down, and accounts payable, or maybe that also went down. But either accounts receivable, that was a huge benefit for them. It's not really going to be sustainable.
Yeah, part of that was intentional, the inventory drawdown.
Yeah.
They've really, really talked about leaning up because it's a company that you don't want excessive inventory on the balance sheet because it's going to get written down. So, but this was probably the biggest swing in working capital that they've ever had, and that really contributed to the cash flow statement.
Yeah, I think they generated $200 million in operating cash flow. That was most of it. I would not expect that to be back. I think they're guiding for like 150 million in 2021. So that would put them a price to operating cash flow of like 12.7. So pretty cheap if they execute in 2021. No dividend, 14 million options outstanding out of 151 million shares currently. So a little bit of share dilution is coming if the stock price stays in this range, and they got the convertible notes too. But I'll kick it over to Ryan. What about earnings?
Yeah, so they had 892 million in revenue in 2020. That was down 25% year over year. COVID hurt them pretty bad initially. It sounds like, but their gross margin was about 35% for the year. The GAAP net loss was 67 million, but they had operating cash. They were operating cash flow positive, and I've heard people twice now cite that $200 million.
Oh, sorry, that was the second half of the year. Yeah.
Okay, yeah, they had 94 million in operating cash flow for the full year.
Yeah, sorry.
But a lot of that did come from the positive change in working capital. They ended the year with 761,000 GoPro subscribers, up 145% year over year. That's something they've really, really tried to pivot to. And they talk a lot about it on the earnings calls, and they've said churn is pretty low. I didn't have a figure for it, but
hopefully it's low.
I mean, they touted the low churn on the conference call, and I can't imagine that the analysts would have. It sounded like they were on board thinking it was low, so maybe I just haven't seen the figure.
And the analysts typically have some of those third-party sources too, though, so they can confirm that. Yeah.
But all in all, it was a generally pretty good year. They've been just a leaner operation all around. They're operating a lot more efficiently, and so that's contributed to the profitability and obviously the turnaround in the stock as well.
Yeah, because you look at that top line number, you're like, oof, bad. But then if you look kind of deeper, average selling price went up. The D2C percentage of revenue was a lot larger. And then the subscribers are huge as well. But we'll finish up the first half with Ian. I want to talk about balance sheet.
Yeah, real quickly before I dive into the balance sheet, I just want to make one clarification. The Nicholas Woodman owns about 69% of the total voting power for the stock as well, which partially explains why he's probably still stuck around. But he owns about 19% of the shares outstanding, 69% of the voting power. So he's likely, unless he decides to voluntarily leave, he's likely going to be there for as long as he wants to, basically.
I'm sure the board's maybe offered the idea.
Yeah, that's crazy. Props to him for staying around and having the ability to stay around. Yeah, the B shares can really give you that advantage, but having that conviction to stay with your company while the stock price basically almost went to zero is, there's some respect.
I think a lot of people would have tapped out. Yeah. They would have said, "Hey, not for me. I can check out, and I've made my money and all."
Guy in there. Yeah.
Right. Exactly.
I do think, if your stock has dropped 99% and the CEO is there from the beginning to the end, you could probably safely assume that he controls the voting power.
Yeah. No, that's a fair bet to make for sure. Diving into the balance sheet though, they've got cash of $326 million, debt of $280 million. And there's some leases in there, but most of that's convertibles, which have about a $10 strike price on both sets of convertibles, approximately. Looks to be, from the math I was doing, it looks to be around, assuming those convert sometime in the future, it looks to be around 10 to 15% dilution. They have some capped calls, which basically the simple thing is those offset some of the effects of the dilution. So not crazy dilution. It looks like probably a reasonable agreements on convertibles. It's not some of the crazy ones we've been looking at.
Yeah, but I was going to say better than Farfetch for sure.
Right, exactly. Net cash, so that leaves them a net cash position of about $46 million. So pretty solid balance sheet. Not a crazy cash position like we've seen with some other things, but if they can keep up the cash flow positive trend, they should be okay. You were talking about some of the working capital needs. Their days holding inventory spiked in the first half of the year, which makes sense. They weren't selling any GoPros in the first half of the year because no one was going out and doing anything, and no one was buying anything. And so they didn't sell a lot of GoPros in the first half. Inventory spiked, but then really came down in the second half of the year, and they really hit some good numbers in terms of the days inventory outstanding, or days of holding inventory. And so I think, like Ryan was mentioning, going forward, they're really going to try to keep that inventory number a little leaner, especially as they transition to more D2C and the software business. So the last thing I'll mention is they've got about $150 million in goodwill, which is a pretty good chunk of goodwill on the balance sheet, but it's been on the balance sheet for like 5 or 6 years and hasn't been written down. So I would say it's probably unlikely that that's written down. It seems like that's a pretty just steady fixture on the balance sheet. But overall, looks like a reasonable balance sheet. Nothing that's too alarming.
Yeah. All right. Well, that's going to end the first half, and we'll get back to the second half, kind of go into the analysis, what we liked and what we didn't like. Welcome back. Next up will be competitive advantages. Gonna say this one, when you go into it, if it's easy to find them, that can be a positive thing. With GoPro, I think it was a bit difficult, and that can be an indicator on the quality of the company, but I'll let Ian kick things off first.
Yeah, to piggyback on that comment, I think all of our competitive advantages are very interrelated as well. So I'll keep my one brief, but I think their history and expertise in the industry provides them a little bit of a competitive advantage. Just knowing how to do these product rollouts. I was talking about the viral marketing earlier, and I think their knowledge of who to interact with, how to kind of create some of those campaigns, those types of things. Just being the innovator in this space and being the first one there, they've got a lot of tacit knowledge they've developed over time that I think gives them a little bit of an advantage.
All right, Ryan.
Yeah, I'm gonna go niche, as in that is their competitive advantage. And like you said, I mean, cameras are it's a very fragmented market, especially with people using their phones as much as they do now. But if you're looking for sort of an action type camera and you don't want to pay too much, I think
And you don't want it to break, and you want it to work in like rugged environments.
I think GoPro has the brand recognition that people instantly go to it. And so there is something there where they're well known enough to not have to spend as much on marketing.
Yeah.
Or sales.
Yeah, I mean, it's small. I guess that's mine too. It's brand. They put a decade into it with their niche market. You know, you're gonna buy it. You're gonna buy from them. You're not gonna buy from Sony, Nikon, or whatever. If you're going for the outdoors camera type deal. I mean, I know when I was doing my hike, a lot of people use GoPros. People are using GoPros. They're not using anything else. They've been doing that for a decade though, and they haven't made any money. So it's like, really, who cares? It's all about the software here, which we'll talk about next. But they put a decade into this. Social channels have a lot of followers. Don't take it with a grain of salt. They got 10 million YouTube subs, whatever. But peak viewership was like 5 to 7 years ago. I was looking, all the videos they have on there that have a lot of views are like 5 to 7 years old. Any current ones, they don't really get any views. So
there is a bit of a cult like following for the people that are like hardcore GoPro addicts. Almost it feels a little bit like Peloton in that way, of people that
don't say that. Don't make that comparison. You'll get some people angry, Ryan.
Yeah, I guess. But people buy the shirts, which blows my mind. But the people that like the Peloton apparel, they're sort of the big advocates for the product. I think that it's sort of the same tendency with GoPro users.
Yeah, and one thing GoPro was trying to do that totally failed was, I think it was 2014, maybe 2015, is they were trying to start a media division, and they had, and this might have been failure from the start, the old Skype CEO running it. That, I don't know, it failed. They shut it down in 2016. I don't know. They've had a lot of failures. They were trying to enter the drone market. They were trying to enter the VR market. Hopefully they've righted the ship, but I don't know.
All right. Future growth opportunities. Ian, you want to go first?
Well, speaking of making comparisons that may not be apt, I think GoPro needs to do what Apple has been so successful in doing. And this isn't to say that GoPro is going to be Apple by any means, but Apple has built such a network of devices between phones and computers and Apple TVs and all this type of stuff that then they can start selling services to throughout all of them, and subscriptions and those types of things. And I think GoPro has a similar opportunity here to continue to push different types of subscriptions and be creative with the different types of add-on features they can do that go out to this existing network of devices that they have, because the device business really hasn't been working for them. Whether it's been the new iterations of the cameras, they'll sell some cameras and that's good, but really what's going to drive profitability for them and cash flow is going to be this high margin subscription businesses. So I really see that as the future growth opportunity, and I'm not convinced that what they have now is going to be enough for it to be a great stock over time. And I think they need to continue, like you were talking about, all the test things that they've done with drones or VR and all this type of stuff. Like I would like them to focus more and more on the software side of it and see what they can develop that's more app based or subscription based over the next couple of years.
Yeah. and even it's just like if you're the CEO, like where would you go to grow? That's
Yeah,
like
it's tough.
wearables, maybe. I mean,
No,
Garmin's
no.
been mildly successful with
Apple's
it.
gonna crush you with that. No way.
Yeah, but that's my thing is like, how do you expand from here? I
Video,
guess,
I mean, video editing seems like the best move.
yeah, it seems like it's on the software side. My future growth opportunity is direct to consumer and making that sort of the primary part of the business, almost going at it like Yeti. Yeti's been very successful with their DTC. I mean, so has GoPro.com. Last year, DTC made up 12% of revenue. This year, it made up 32%. I think COVID was probably a good catalyst for that as well, since less people were shopping in person. But going DTC helps GoPro reduce inventory, and it also helps when they have less inventory, they don't have to. So they've got all this production, and once you produce a new one, let's say you have the Hero 5, then you produce the Hero 6, Target is going to sell that old inventory at a lower gross profit, which hurts you. And then you have all that inventory that's just not, I mean, it's just sitting idly. And so becoming leaner starts with going DTC. And they've done that and they're going to keep doing it. And I mean, that's really what they're driving. And they're trying to drive that home with investors. And honestly, that's probably what's driven the bulk of the rise in the stock price.
Maybe.
I mean, the subscription pivot as well, but
I think it's the 145% growth in subscription, but I don't know.
Yeah. It's just, I mean, the operating cash flow, I imagine a lot of that came from DTC because it allowed them to go leaner on the balance sheet.
Maybe. I don't know. But one thing is that, yeah, it does help the gross margin for sure. And that's important because at 35%, or what was it? I don't know. They just need to raise that up on the hardware.
It's hard. Yeah.
It's tough though. It's tough. Ian, I think, did you raise your hand? Do you have anything or no? No. Okay. Yeah. All right. Mine is the quick subscription. So this is different than the GoPro sub that Ryan was describing earlier. Although if you are a GoPro sub, you get this for free. It's $2 a month or $10 a year, and it offers like nice editing tools. I know that if you have a phone, you get this, and like if you're on something like Instagram or YouTube, you kind of have this as well. But they're trying to basically own everything for their customers, from like the filming all the way to you're going to post to your channels. Obviously, they're not going to disrupt YouTube, but if they can do everything from there, and then I don't know, you gotta kind of think, all right, how many subscribers are they going to be able to get? Can they raise prices with this? Because they're kind of going in with a low offering to try to get a bunch of people on it. I don't know. I think this is a decent idea. What are your guys' thoughts?
Yeah, I think that was the first thing when I hadn't realized that they had a video editing software. My first thought was they should buy or partner with Adobe or something like that to edit videos, because people are uploading it or downloading it to their computer. And then the next step is editing. Obviously, I don't think they're ever going to be the distribution platform like YouTube or a TikTok or something like that. But
right, they kind of tried that and it failed. Right.
Yeah.
What was that? Back 2015, 2016 or so. They
were trying to do the media part.
Yeah. Just owning everything up until distribution for that niche. That's really their bread and butter, and that's their role. And that's hopefully, I mean, that's the only thing I can think of for growth is really owning the software side.
Yeah. And then the subscription it's like half software for these editing tools, and it's half like a loyalty program. So that's kind of a part of it too, to get people to buy your hardware each year. What are you guys' thoughts on this though? If they should go, and I know it's not apples to apples, but should they have a Roku mindset where you're going to have quality stuff? You're basically going to sell your hardware at cost to get it to as many people as possible, and then make all your money on this software stuff.
I like that if they have good software. But that's my question right now, is I don't know that they've proven that they can generate enough income from these other services and the software and the subscriptions and all this type of stuff. Like if they can really make a clear picture if they can paint a clear picture of the consumer lifetime value and say, hey, if we can get these people as part of our system, they're going to give us all this money over this course of time, then yeah, go for it. I think that selling it at cost makes sense, but I'm not sure that they're quite there yet and knowing what their customer lifetime value really is.
They are almost doing that for subscribers in that the 50% off accessories
adding
and
that,
the
yeah.
free whatever returns or whatever that was.
Yeah.
So yeah, I do like that idea, assuming churn is insanely low for the subscription. If they have like 15% or like the retention rate's only like in the 80%, I would not do that.
Yeah, well, then the business is broken anyways, so then we're all screwed. But they've said low churn. It kind of reminds me of when a company's like, yeah, we're gonna go revenue in the double digits. It's like, oh, all right, good range there. But to give some numbers on what they say on their subscribers, they say for every 1 million subscribers, that translates to 50 million in revenue. Yeah, $50 a year times
Sure.
1 million. And they say that they get 50% operating margin, which would be 25 million. So
Wow.
if they get 4 million subs, that's 100 million in operating profit. The only question is, are there 4 million potential subs out there? And I don't know.
Yeah, I'm not sure. Highlights and lowlights, Ian, what do you have?
Yep. So I think the highlights for me start with obviously the software growth year over year has been impressive, but I also really like the D2C transition that we've seen at 32 or 33% of the business now. They've got a valuable brand. But one thing I'll say is, as I was looking at it, it kept popping in my head. And I know people have been talking about this for years, but it looks like a prime acquisition candidate, something that has that really valuable brand. The valuation isn't insane, at least in my opinion. But they don't really seem to know how to execute. At least they haven't over the last, 6 years. So, as an Apple shareholder, this would be a drop in the bucket of Apple's cash, balance. I'd love to see
Like a week of
Apple
cash flow.
swoop in. Right. It's a week of cash flow. Exactly. So I'd love to see Apple just take a flyer on something like this. So I think that's a highlight for me, is that it does provide probably a floor for this stock. Now, people have been saying that for years and no one's ever actually bought it. So I don't know if that's because no one's interested, or if the founder doesn't want to sell, or who knows what it is. But
I mean, Apple loves the video and camera part. That's kind of their whole pitch, or the number one pitch of the iPhone, is that you can basically do, or at least nowadays, you can do whatever, film quality on your phone.
My thing is like, yes, it seems like a good acquisition candidate, but then you start to think about who on earth would acquire them, and it's like,
Adobe, maybe.
Don't you think if the floor was high, the floor would have been hit when it dropped 99%?
It's different.
You would have thought.
Different. They were doing some really dumb stuff. Maybe they've turned the corner.
I don't know if just adding a subscription totally changes the business model. Maybe there's
which makes me wonder if it's something more related to the founder, and it's not that the offers weren't out there, but the founder didn't want to sell. I don't know if that's the case, but with that much voting control, I think that's a factor probably.
And yeah, I just said that the subscription doesn't necessarily change the business. I think it does change the business. I don't know if it totally changes whether someone would want to acquire this business.
Agreed, because if Apple's looking at buying this, just for instance, like that's the one that makes sense to me, right? It's kind of like the Beats acquisition, but Apple's buying it for the brand. They're buying it so they can sell GoPro products, and then they don't care about the software business because they're just going to incorporate it into all of their subscriptions and their software business, and increase the value of their consumers. And so they don't care about GoPro's little fledgling software business. They just care about the brand. At least I would assume so, looking at it from the outside. So like I said, it's a little bit, I thought it was worth bringing up. It's a little bit of a highlight for me, I think. Low lights, the years of languishing. And then this new app that you just mentioned, Brett, Quick, seems a little bit fragile to me and more like a feature, like you were mentioning. There's like some stuff on all of our phones now that we can do editing through our photo apps. They said one of the selling points for it that they were talking about was that it's like a more curated version of your photo feed. And so instead of just having like tons and tons of like photos and videos and all this type of stuff, that it would curate it a little bit. But again, it seems more like a feature. I know Apple's trying to do some of that in the Photos app. And I'm just not sure how many people, like if you're not getting it through the subscription bundle, I'm not sure if it's enough of a value driver that anybody actually gets it. I don't know. That's a tough one for me.
That's a good point, because Apple, Google, and Samsung and whoever, their camera products and their gallery or whatever, that stuff really hasn't been that great. A lot of people complain about this stuff all the time. But if GoPro fixes that, I mean, it's like, all right, well, these guys can just see what they did and copy it. So yeah.
Wouldn't you, I guess my thing would be like, would the bundle be better if you got sort of a discounted rate on a Premiere editing software instead of like, so if they partnered with, I think Adobe does a lot of like, there's sort of the Premiere one.
Yeah.
What if they partner and you got a discounted rate on that? Like, wouldn't that be better than? I don't use Quick. I don't know how good it is, but
they just started up, so I think, I don't know. I bet Adobe has more than GoPro's entire employee base working on stuff like this. So,
all right, Ian, you already hit your highlights and lowlights, right?
Yeah.
All right, then for me, I think the changes in operating efficiency are a good sign. The economics are getting better with the subscription, and the 4 million. It seems audacious, but it might be possible. They're growing triple-digit subscriber base right now, and they obviously have that easy marketing funnel with the different social medias.
And I should say that Quick, when it was a free app, had 9 million users or downloads, so that's another way too. Yeah.
Okay. Lowlights. I'm not a huge fan of the CEO. I don't think he's a tremendous operator.
No, what makes you say that?
Well, yeah. But go read the conference calls. I encourage everyone to go read the conference calls. It seems like he could kind of care less about shareholders, which it's fine. Like, some business operators just want to run their business, and they don't want to they're worried more about the customer than the shareholder, which is okay, but we're shareholders.
Yeah.
So that's what we care about. The COO is okay. And it seems like he's sort of carrying the weight operationally, as he should, but
he's CFO too, right?
Yeah, I think so. It seems like he's running the business. It seems like they're kind of just saying like the CEO is the visionary, but it seems like more he's giving himself the title because he has 69% voting power.
They did make this mean to say explicitly in the 10K that the CEO is still head of design. Don't know why they needed to tell us that, but maybe he really just cares about making the good cameras.
Yeah, that's my primary low light, and I don't know where revenue growth will come from.
Yeah, that's the big you hate to make addressable market a low light, but I mean, it really hurt them.
It hasn't gone anywhere for 7 years.
Yeah, and I wonder, did they make a mistake not trying to be like Peloton and sell their cameras at a premium? Do you guys?
I think for what they've done since then, yes. Like, if they knew they weren't going to be able to, that all of these ancillary services that they were doing for the last 6 years wasn't ever going to take off, then they should have been selling them at a premium and really try to capture that premium market and get better margins. But the problem is, like, you would have thought that they could have captured more subscription-based services and all these add-ons and the accessories and all. Like, that's where they were supposed to make their money, but they haven't really. I don't know, Ryan, what were you going to say?
Also, like, there's like Peloton, you could say, is best in class quality. GoPro is good, but they are not production level cameras, which if you're going to really, really pay up for a camera, why not buy like a production level camera?
Oh, because they're $10,000.
Yeah.
And in the action camera thing, like, to be fair, GoPro is priced at a premium to, like, you can find other action cameras that aren't as high quality and stuff like that. So
and
they're
they're
priced
the
at a premium
basic.
within that niche. Yeah. But it's not like some crazy premium either. At least when I've looked at them before, it doesn't seem like GoPros are way more expensive than like the more kind of generic version of the cameras.
Yeah, and the thing is with something like, okay, Peloton's in a way, I really don't get it, but it's like a fashion thing, right? Or like, it's kind of
fashion,
like where people they have them. It's kind of it's a brag almost. That's kind of, well, people may not say luxury. I used the wrong word. Yeah, it's that's part of it. GoPro, the way they are, you attach them to your body, they look ugly. I don't know. It's part of the deal. It's like a downside.
I don't think a GoPro is a flex. the way a Peloton is.
All right. I guess we're kind of getting more or less interested, but I'll hit any highlights on that I had that we missed. I think the software stuff is a good move. It's the move they have to make. Maybe if they can get to outside of just people who are already camera owners, that could expand the number of subscribers they have. But I mean, their category's just been stagnant over the last decade. That's a huge liability in my book. Hardware is just so tough. And you're going to have stock option and convertible headwinds now. It'll make the enterprise value change on the convertibles, but there's, I don't know, 15 million in stock options outstanding. That's going to be a headwind too. Yeah, there's some lowlights there. I don't know. I guess we'll wrap things up more or less interested. Ian?
For me, this was a company that I thought I had never really looked at before, but I think after looking at it, I'm actually going to be a little bit more interested. I think there's a case here where it's all, for me, the thing all hinges on what's the churn rate on this subscription. Yeah. If the churn rate is low, then this is probably something I'm going to look into more. But if that churn rate is high, a business that I'm not that interested in, and we just don't have a great grasp on that. I think it's just too early to tell on some of it about what the pattern of these consumers is going to look like. So slightly more interested. I think there's some opportunity for an investment here.
Yeah, and you did bring up a good point where we may have been talking about this before we started recording. The subscriber numbers, when they do that bundle thing, it's unclear whether that
purchase.
They bundle a camera and give you subscriber. It's unclear whether that's a bit artificial in that growth. And that's a big concern for me too.
Yeah,
Ryan, what do you think?
It might be too young, or the subscription part might be too young to see how low churn truly is.
Yeah.
But I'm less interested. You could still generate good returns. I think at a $2 billion value or $1.9 billion valuation, if they can get to sort of 200 million in operating cash flow, that can still generate good returns. But I don't see this being a huge compounder. I don't know where growth comes from other than changing sort of the economics of the business. I see it unlocking a little bit of profitability there, but I don't see them expanding the top line a whole lot.
Yeah. I don't think anyone can disagree with you there, Ryan. I'm kind of on the fence. Look, if they start generating $100 million in recurring revenue that's high margin, and the churn is low, like Ian was saying, that big concern there, that puts a floor on the stock. But what's the upside?
Yeah.
There's a lot of businesses that have been in smaller markets that have really just reduced their share count by like 80% over a decade. And that's where a lot of the returns come from. Looking at the balance or looking at their kind of the share count stuff, that concerns me a bit too. And it's just I don't know, if there was a clear path to 5 million subscribers, that's great. But I just really worry about that.
Yeah. And I actually wanted to I picked this stock for last week. So I wanted to like it. And it was recommended by, I think it's like Akram's Razor.
Yeah. Smart guy on Twitter.
Yeah. Smart guy on Twitter. Someone we respect. And so I wanted to like it, but I just came away not being convinced of the growth.
Yeah. All right. Ian, anything else? And if not, you're picking for next week. So what do we got?
Yep. For next week, we'll get a little bit bigger. We're going to go with social media, social commerce, Pinterest. So taking a look at the one of those battleground social media stocks.
Yeah. Perfect. All right. Well, that's going to do it for this episode. As always, use our code CCM at checkout to get $10 off your first month at 7 Investing. Remember, we are not financial advisors. Anything we say on this show is not formal advice or recommendation. Ryan and I are general partners at Arch Capital. Arch Capital may hold securities discussed in this podcast. Thank you all for listening, or for the few that watch, and we'll see you next week.